is Martin here from seekedge, the channel for learning about trading and investing, and welcome to another daily technical market analysis show. And we'll be looking how we can trade better and what happened today. And this is an analysis that's meant for August 25th, Wednesday, tomorrow, right? So if you're not subscribed, please subscribe right away and share it to your friends. Thank you. And as usual, we'll be going to look at all of these parameters. On the left side, you'll be looking at the charts and see all the candlesticks, price action, support, resistance, moment, divergence, and all these things. And then we look at additional analysis on the institutional participation, global markets, and all that, and then we'll wrap it up, right? So without wasting time, let's get into the charts. And this is the Nifty 50 chart. You can see that the bounce happened, and the bounce was weak yesterday. Today it is a strong bounce that happened, right? Higher high is formed since the last 3 days, and this zone of 15,400 seems forming as a good support. This is a change in polarity bounce, and also it's a momentum bullish reverse divergence that worked out for 3 days, and we are closing again back to the near all-time high of 16,700. Bank Nifty, we had a very bullish candle, right? That also was at a support zone of 35,000, and then it bounced from there to close around 600 points, 587 points up, while Nifty closed 128. So it was a bullish day overall. So what happened in intraday? We go to the lower time frame. You can see that today, 24th, it gapped up, then did a dip, and then it was trending up throughout. Gapped up for did a dip, and then it was trending upwards. Bank Nifty also. So Bank Nifty was ahead from the beginning. Nifty caught up with that, and then right, and so that's what you can see. It caught up with that later in the afternoon. It trended high along with that. So that's the price action. And Bollinger Bands as usual expanding. This Bank Nifty also slightly expansion started, and we would now look at the support resistance levels. You can see that this zone of 350 400 is forming as a good support. That's where it bounced up from. So the first support will be there, right? Before that, you can say that yeah, so below that you have another support at 16,250, and that is which is a fib extension 38%, and then you have the fib 23% retracement levels of 16,100 and 16,150 kind of levels. So below that you have the 59,950, 850 kind of levels. So plenty of supports down there. First resistance will be taken with all-time high of 15,700. You will have resistance out there because of the previous resistance, and also it is 61% fib extension, so that resistance will be there. Along with that, it is the previous. So this has to be, if that is taken out, anything above 61%, whether it is a retracement or extension, it is going to be long on that side. So this 17,000 is easy task if this crosses, right? So that's what you have to hope for. So the momentum, you can see that there is a divergence here, and it is a work in progress. 3 days it is working, it's lifting the market up, and it is bullish. Bank Nifty, he's not climbed back to the bullish zones with respect to momentum, and is still in the sideways, but you can see continuous 3 days of higher high that is formed. And trend, if you see, it is crossed over to the bullish zones for Bank Nifty. For the Nifty, it is already in the bullish zones as per the index, and the strength is also good. Bank Nifty strength is weak, although it is crossed over to the bullish zones. And now let us look at the open interest data. So Nifty futures data, if you see, you can see that it is definitely long build-up on both indices. But if you see the options data, you can see that it is the highest support of 16,500, which is so overall it makes a bullish graph. So 16,500 is the highest. There's huge puts right here is happening. And 16800 and 700 also has got resistances, and you can see that 16600 also a lot of build-up has happened, and so it is whether it will settle at 600 or 500 is something that we have to see tomorrow, right? Put call ratio has jumped up to 1.3, is bullish. Put call ratio Bank Nifty also has jumped up to 1.22 after a long time, and you can see that this graph is also bullish. It's higher support at 35,000, then you have 35,500 support, so two good supports, and then highest resistance you can see at 36 there. So the key is whether it will be able to conquer the 36,000 again and in fact sustain above that is the question that is going to happen for tomorrow and after 2 days of price action. Let me tell the story, but put call ratio and the graphs are showing bullishness on the open interest of options for all the indices. Now VIX, what happened today is it had fallen down. Actually the VIX fall down today, right? You can see that intraday, if you see the price action for today, it went down when the market shot up, yeah, and then this is something contradicting. So when the market continued to move up in the afternoon, the VIX actually shot up, right? It is supposed to have come down, but it shot up in the market. So you can see that at 1:30 you have a big move that happened, right? That is where the Nifty trended. But look at VIX. VIX has, right, so between 12 and 215, between 12 and 215 the VIX, the market shot up and the VIX also shot up, which is unusual. So right, so the VIX is supposed to have come down, so that means that up move that has happened is not strong or not real, probably. That is some assumption that we can probably make, right? Right, so that is something interesting on the VIX side. But VIX has had hit the 14.6 level, 4.4 levels. So 14 point was closing also that happened at 14, but seems like it is not holding there. This dip today to some extent is what we can see from the big side. Now institutional participation, if you see, the data might not have come, so I'm looking here. So you can see that today 24 August the FI has sold 106,650 crores in the cash, and the domestic institutions bought heavily 2,380 crores. So that means big buying is happening from the domestic institution side, while big selling is happening continuously since last several days. This is a concern. 1, 2, 3, 4, 5, 6, 4 or 5 days. Continuous selling is not good, and that is that the volumes are big volumes. Friday big volume, big volume, big volume. But today the market shot up only because of domestic institutions. Will they continue to do that when the market is at all-time high level? You have to go and see. So that is a concern. And sectoral, if you see the, you can see that if you look at the heat map to see what performed today, you can see that only FMCG and IT did not perform. All others are green, right? So FMCG, Asian Paints, Dabur, all of those didn't work out today. IT also, for a long vertical rally, it is taking some kind of correction has happened. Let's look at the charts on the IT. So you can see that there is bearishness, right? So it has run up the vertical rally, so to be cautiously bullish there. Metals had taken a support at 40 and started, taken some kind of support, and then it is moving up. That's what it said, but it's still not time for going bullish. Auto has gone to the deep bullish area and slightly moved up, but it is still in the bearish zones. And pharma also, it is gone into the bearish zones, but it has shot up today. It has taken a support, and then seems like it is trying to go back upwards. So you have to wait and watch till it climbs the bullish zones. So this is FMCG. Sorry, earlier I said this was metal. So metal stay away until it reaches the bullish zones. Auto stay away until it reaches the bullish zones. And pharma stay away until it reaches the bullish zones. FMCG is in the bullish zone, slight correction, slight dip, no, that's happened since the last 2 days. So we're being cautious there, and because there is a correction, how far the correction goes, we'll have to see, right? But it is a breakout and it happened, so it's overall it's bullish. Real estate has all gone to so rest also only IT and FMCG continues to be there. Others are moved up slightly up, but they're all the bear zones as of now. Now, if you look at the USD INR, you can see that there is so actually the dollar index actually did a false breakout kind of thing, and this pattern W breakout went above that resistance zone and then reverted back since the last 2 days. It's big dip. Now it is continue to take support here and then bounce back. So dollar has weakened. USD INR is currency pair for rupee and US dollar is continue to be at the support zone hovering around, and it is near to the channel top. Gold has shot up. You can see the big pullback from the hammer zone. You can see that it's continuously heading towards the channel top. That's what it looks like. So gold is bullish again after a dip. Global markets as of now it looks all green out there. Nasdaq 32 points up, Dow Jones and S&P 500 all are green. UK there is some bearishness in the FTSE and others are all green. Even the Shanghai market is also. See this case. Global markets are not bearish at least. We'll have to check that tomorrow. So that is a summary. So it is the bias has changed back to bullishness. But you remember that highest opportunity is not at 15,700 as of now. It's at 16,500, not at 16,700. 16,700 is the previous resistance one, and also a 61% projection extension Fibonacci extension area. So there can be resistance out there, and anything above that is going to be. So whether we'll be able to take it out or not, we'll see tomorrow. But Fyers selling is very big concern. So buyers is slightly changed bullish because BANKNIFTY has made big moves, but it's all happened because domestic institutional buyers, not Fyers. So you have to be cautious. So if you're planning to go long only after you see green candle closed above 61% fib extension, that is above 16,700 level. If you see a green close above that, you can go long. If you're making a portion entry at this point. If you're already long there, you know that the levels there are multiple supports down there at 16,350, 400, that we have support, 150, 16,000 level you have support. So depending on where you entered and what is your stop loss breaking signal, we'll have to play. Intraday, even today also there is V-shaped moments. It goes down, somebody buys a dip, it goes up, it meets resistance, comes back. So this kind of movement is what is happening. So you'll have to closely mark the levels of previous day's opening high and then look at the candlestick patterns for the lower time frame 15 minutes to see whether there is a reversal signal, and accordingly you'll have to trade at the different swing levels as per the price action. That's how we have to play. Actionables right now, it's not wise to get into the only two sectors which are bullish, FMCG and monthly expiry is coming, so this is not the time to get into stocks because all sectors are bearish. It is not that recovered from that pullback, and IT is overbought, right? There is vertical movement that has happened, so we have to be very careful there. FMCG is one area, but it is showing 2 days continuous correction, so we have to look at where it is showing in green above the close of yesterday's candle. So depending on that, we'll have to take the stop positions. As you know, there is no recommendations actionable on that. There is no suggestion. Actually, there is no recommendation coming in here. It's all they are all for educational purpose, not for trading purpose. For trading purpose, you have to, based on these details, you have to study the charts, reconfirm, revalidate what is said is correct or not, and then take your decisions as per your capital and your risk and your financial advisors. Take. That's a disclaimer there. So I hope you got an overview on what happened yesterday. Right? It was a weak bounce. What happened today? It was a strong bounce. Weak bounce turned to a strong bounce. Now, what next? You have a big resistance zone out there. It has to break 61%. So if that breaks, then you're long. That does, so you will be cautiously playing, assuming that there could be some reversal. So that's a view, and then based on that view, you have to take a call and trade well tomorrow. Thank you for watching. If you're not subscribed, please subscribe it right away and then share it to your friends, and that does not cost you anything. That keeps us motivated to do this every day. Thank you so much, and happy learning and happy trading.